The last one I added recently, number 18. It's bold on purpose. It's really important. It's a little bit dated at this point, but I think it's worth talking about because I think that most businesses are completely ignorant of this new rule. And what we're talking about here is the new partnership audit rules. The new partnership audit rules with the IRS. Are you familiar with those?
I'm not. So, I know I'm going to defer to this one on you and get educated myself.
All right. So basically what happened is that the IRS historically would audit a partnership, limited partnership, LLCs, taxes partnerships, anything taxes a partnership. There's a lot of different kinds. LP, LLP, triple LP, general partnership. There's a lot of kinds. Gotta wrap it up. I have a meeting coming at 5. Forgot about that. So the IRS would historically assess a deficiency in tax at the partnership level, and then they would have to chase the partners. And as you would expect, when you get into sophisticated partnerships, the partners are all made up of different entities who are made up of different entities and who are made up of different entities and so forth. So you really got to get granular and go through a lot of effort to find the inevitable taxpayer that's responsible. So better late than never, they finally wisened up and they said, okay, no more, none of this crap. We're going to assess the partnership level, and we're going to collect at the partnership level. We're not going to go find you guys, the partners.
Wow.
Nope.
Okay.
It makes sense given that there's like 4 people working at the IRS right now. At least you thought it was funny. And so basically they're assessing at the partnership level, they're collecting at the partnership level. And what they did was, it used to be called a tax matters partner. That was the person who was kind of dealing with this in the business. It's usually in an operating agreement that has any quality whatsoever. Now it's called the partnership representative. The partnership representative, PR, is the only person who can talk to the IRS and who can bind the company with the IRS. The only person. So now what happens is you have this person now talking to the IRS. The IRS, maybe they're negotiating, maybe they're not, but there's options that this person has to benefit the partnership, to benefit the other partners who are not in the conversation. They're not allowed to be in the conversation. This person, if they make a deal with the partnership, with the IRS, will in fact affect the partners. And the partners have no representation.
You better pick that person wisely then, huh?
I would say pick them wisely, yes. But I also would say you should build into your agreements this new section that, of course, we've developed. And I have not seen one as good. And a lot of reputable firms I've not seen it as good as mine. We really thought it through. We did a lot of research on it. And we basically developed this provision that says that this person who's responsible for working with the IRS to negotiate and to bind the company and the partners has all these obligations to at least disclose, notify, give all the options available to the partners to maximize their tax benefits. In a sense, there's a lot of elections that they can take to take it back into their hands. And you want to make sure that you're at least giving those people the right to do that. And that PR has the obligation to do that under our agreements. Whereas if you don't have it, this person literally can be binding these partners in a much more adverse tax position without even them being allowed to be involved in the conversation. So it's a very big change. There's a lot of partnerships that are excluded. There's a lot of partnerships that are not excluded. Grantor trusts, which we do a ton of, are very much relevant here. So that's why I made it a point to be on top of it. All of our operating agreements that are partnerships will have this in it, almost by default. It's just a matter of massaging the terms. So the new partnership audit rules is important. People don't really understand it. They're ill-equipped to address it because their documents are silent. So hopefully those partnerships aren't even subject to it, but if they are, they should definitely look into it.
I'm glad you added to the list because I probably have many clients I need to review and have get their stuff updated.
Yeah, we worked with, CPA firms to really think it through and understand some of those components because like I said, I've not seen a good one in reputable firms. I've seen garbage. So that's 18 things on our top 10. I've enjoyed going through these with you.
Haimo